Hello, traders. It's 8:01 a.m. Chicago time on Tuesday, the 30th of June, 2020. Thanks for joining me today on episode 1787. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, really, the sentiment is mixed. Now, most of the indices are lower. The S&P is trading down 7 points or 0.23%. The Nasdaq 22 points, 0.21%. The DAX is down. The Euro stocks are down. But also crude is down. Crude's trading at 39.10, down 60 cents or 1.51%. Crude is suspected to be lower due to more supply coming online from Libya as the civil war there calms down. U.S. Treasury bonds are up 10 ticks, and the dollar index is up 15 cents, trading at 97.65 even. And gold is trading at 1781 and 60 cents, up 40 cents or 0.02. So overall, we're just kind of sitting sideways. The market's in a holding pattern after the push up yesterday. We'll go over what was expected versus what we got. Hopefully you can hear me loud and clear. Please let me know if you're not or if you are. It doesn't matter. And that's where we stand. That's the overall market sentiment. This morning, we just need to pay attention to the fact that we have Fed's Chairman Powell testifying at 12:30 Eastern, along with Treasury Secretary Mnuchin, to the House Financial Services Committee. We do have FedEx reporting after market. FedEx is expected to announce $1.52 per share on 16.49 billion in revenue. So that's what we're looking for. Again, the big items today on the calendar are we do have a lot of speakers coming out today. We did get Case-Shiller home prices. We get Chicago PMI at around 8:42 Central, 9:42 Eastern for private, and 8:45, 9:45 Eastern for the public. Expecting 44 there. Prior's 32.3. And then we get ECB's Guindos at 11, Fed's Williams at 11, Fed's Brainard at 11:05, and again Fed's Chair Powell and Treasury Secretary Mnuchin at 12:30 p.m. We get Fed's Bostic at 2. We get Fed's Kashkari at 2 as well, and that's how things are shaping up. Japan gets the Tankan Large Manufacturers Index at 750, and then China gets its manufacturing PMI at 945. That's the lay of the land and what we have ahead of us in terms of what is scheduled. In terms of what was expected yesterday versus what we got in our review segment, the primary scenario yesterday, we expected the market to open around 3012, 3013, right on top of the overnight point of control. And the expectation, as you see on the chart in front of you, by the way, if you're not seeing this clearly and you're on YouTube, please hit this cog right here and switch your quality to 1080p. That'll clear things up for you. But the prior session low is right here, and the expectation is we would dip below the low, if you recall, expecting a test below the impulse from Friday, and then to turn around and push into the 30-40. So that's yesterday's plan, with some resistance along the way in the 3020 to 3022 area. Expected the overnight high to be taken out for the overnight stat. Here's what we actually got. Pretty much exactly what was expected. We opened a little bit higher. Well, actually, we opened at 3013. We moved down to the prior day's low. Let me remove these stock zone levels. We move to the prior day's low, which is the green line. We poke through, we turn around, and we push all the way into the 30-40. 30-40 struck right here. Scenario one plays out almost exactly as anticipated. Doesn't always work that way. But also note that the delta is really mimicking price here. There's some pretty good participation across the board with a good finish. With a good finish. The big thing to recall, though, let me pull this up real quick. My composite chart. Here it is. Here's something to pay attention to. This is my composite chart. Some of you may be familiar with this chart. Each one of these bars represents an RTH session in the S&P. Okay, so each bar represents the day session only. And what we see here is we peak out at 31.45, then we make a lower high. So now we're potentially locked and loaded for one time framing down. And as long as we keep a lower high, we don't care if it's a lower low. As long as the auction doesn't come out and take out the prior high, we are one time framing down, and we continue to do so day after day after day, including yesterday. Now today we're opening a little bit higher, and so it's going to be crucial to watch that high of yesterday on the break of the one-time framing down, which is at 30.4875, called 30.49. It's going to be important to watch how that's traded. The market is not giving up any territory near highs, but we have one-time framing down. So for a lot of auction market profile and so on traders, the trend is actually down. The overall bigger trend is actually down, and this may break, and if it does, it is likely to squeeze quite well through the 30.50, take out the 30.60 area, very important, 30.60 area, and start walking back to 3100 for that MC point of control and composite high volume node in this area. A lot of confluence around 3100, including the 20 SMA. So this is what we have to watch out for today. Today could be a reversal day up. Yesterday managed to put in a lower high, lower low, and this might break today. So just a word of caution as a big picture thing to monitor. Again, let me turn off the stock zones here, and you can see it right here where we are just kind of making lower highs, lower highs, lower highs, and lower highs. And this could start to reverse back up. And of course, the target is going to be right there at the 3098 to 3100. So pay attention today. The overall profile on the left, this yellow profile here is showing that we've built up quite a bit going on here. We've got a nice high volume node that is getting close to being the MC point of control at 30.3850, which is where we kind of topped out yesterday. You'll notice there's a stock zone there for those of you who have the stock zones, and it's sitting right on top of this composite high volume node. So we have a market that is really trading very methodically, and we're sitting on top of this. What does this mean? With the potential for one-time framing down ending, and with it sitting on top of the high volume node here and the MC high volume node, what we have is a market that may be wound up. Look at the profile from yesterday. Let's clear this even further. So if we look at the profile from yesterday, look at that thing. It is loaded on top of the micro composite high volume node. The composite high volume node, we went and had acceptance right on top of that. There's a lot of energy pent up in this area, and we could see a very strong squeeze out of here. Just a word of warning to those who are still banging away on the short side. I would caution that today might see a reversal. Why? Because we finished strong with a strong delta and we are very close to yesterday's high. We have not given up any of the territory near yesterday's highs. This puts the high in check from yesterday. When you look at the overall action here, you'll notice that we have just simply been stuck for the last 3 weeks. We've simply been stuck in this range between 31.45 and 29 50-ish. We've been stuck in here, and there's a distinct, when you step back. Remember that post that I made, that tweet I made a week or 2 weeks ago saying, if you feel like you are lost in terms of what the market is trying to do, the best thing to do is to just go up a couple of time frames. Day traders go to a 60-minute and then maximize the image on your screen and go to the other side of the room and look from a distance, and what you'll see is this dividing line here in the 3080 area. And we basically had acceptance up top, which is where the MC point of control is, and we have a high volume node in the at the bottom end, and we are basically bouncing from 3100 down to 3030, 3100, 3030, and that's what we're doing, back and forth, back and forth. And then it's likely to squeeze back higher into 3100 going forward. I want to remind you that today is the last day of the month, it's the last day of the quarter, it's the last day of the first half of the year. We are likely to see some volatility into the close if tradition holds. We're likely to see some repositioning, hedging, and so on. So if you're trading the futures, be careful, as that's likely on deck. So let's move on to the overnight session. Let's go to the overnight session and see what has carried forward. So, as I said yesterday, finished strong delta, and continued to peak out. Consolidated most of the Asian session, and then sold off on the European Open, which is right here. We sell off and we explore a little bit lower. We do not manage to get down into the 30.19, 30.20 area down here. We're holding a pretty high. We have two distributions, one in the Asian session and one in the European session. On okay volume. Volume keeps dropping in the overnight session as we keep coming in. Of course, as we go into the summer, this is what it looks like. The market is still quite nervous about coronavirus. We're still getting some bad news on coronavirus. New Jersey canceled the opening of restaurants and bars and clubs and things like that, which was slated to happen tomorrow. That was canceled. Arizona issued an order to shut down social businesses, again, bars, clubs, things like that, restaurants. There's a resurgence. If you have not looked at the coronavirus numbers recently for the country, you might want to do that. It reads like an impulse pullback continuation kind of potential. Hopefully not, but the market is very nervous about what coronavirus has been doing, and there's been talk, an assessment of what the Fed has done, and it seems that it says that the Federal Reserve's promise in the early days of the coronavirus pandemic to flood the U.S. economy with trillions of dollars seemed like the proverbial central bank bazooka, and has been more of a trickle in practice, with activity outside the U.S. Treasury and other core financial markets so far only a fraction of what's available, and with lending to companies in the real economy virtually non-existent. So what Powell will say today will be quite important, because essentially a lot has been promised in terms of stimulus, and it hasn't been at the magnitude that was expected. Uh, so this is where we are. I mean, there's a lot of room to the downside here, is my point. The market keeps coming to the downside, but it keeps squeezing higher quite quickly as well. And I think we're in the rotation that squeezes higher, especially if we take out yesterday's high. Anyway, that's the long story, I guess. I need to start really condensing what I'm saying here. This is the overall heat map from last night's open at 5 p.m. my time. And you could see that the market has played up high. It held it held up pretty high overnight with some liquidity available at 3060, has canceled for a bit and come back. I'm not sure if that is stable enough. We do still have that liquidity in the 3025 to 3020 area down here. And overall, the market is in a drift. Not very much to glean from the overnight session in terms of the heat map. There's just not all that much there. So a lot of liquidity up top, 30.75. That's likely to stay and be stable for several days. And so that's where we stand. Now let's take a look at what's expected for today. Again, yesterday's scenario one was on point. Today's a little more tricky because it can go in either direction. It can go in either direction, but this morning the expectation is an open auction that dips down, comes back into balance, comes back into the point of control from yesterday. Yesterday's point of control is at 20.2775, call 30.2775, call 30.28, expecting it to come back into that potential test to 30.20.21. There's liquidity there at, remember I showed you the 30.25 on the heat map has some liquidity. I'm expecting it to bounce, and I'm looking for it to squeeze this 30.50 area. Glancing over at the heat map, not seeing much liquidity at 30.50, and I'm looking for a push through the overnight high and the beginning of a test of 63.25 and potentially higher before it balances out. Again, we have end of EOQ and month, okay? End of quarter and month and mid-year as well. So be careful. At some point, the market is likely to get noisy here. That's scenario one. Scenario two is the opposite, looking for an attempt higher, a potential to push this 48.75, a quick flash, and then an impulse down brings us back to yesterday's close and then back into balance to test the 30.20 area, squeeze through down into yesterday, the prior day's close, 2 sessions ago's close, and the stock zone right here in the LVN down at 30.10 or so before it rests back up. That's scenario two. So this morning I want to see if it drops immediately in the quality of the drop, and then I'm going to take any turn higher very seriously. I would caution perma bears and shorts here to not fight the push through the 30.50 as it's likely to continue to squeeze to 30.63 and so on as we make our way back up to 3100, which is the other balance zone. Again, we have one prominent high volume node at 3100, and we have a second at 38. Okay, so 30.38 and 3100. These are the two ping pong points, two areas of acceptance depending on what the market is feeling at the moment. Good luck with that, and I'll catch you tomorrow morning. Take care.